Welcome to the Energy Dialogue podcast. My name is Max Kamonju. We are at the Mercury Hotel at the third oil and gas conference. And today we are joined by a special guest, Angelique Peake, the sector head of oil and gas and energy and resources at RMB Namibia. So Angelique, has over 2 decades of experience in leading strategic client engagement across the full energy and resource spectrum, and that's in oil and gas and mining. And then, so we will just be having her to dissect some of the issues that Namibians are passionate about. Welcome, Angelique, to the podcast.
Yeah, thank you very much.
It's good to hear to have you. Just maybe as a precursor, Angelique, can you maybe tell us about your role at RMB and the focus of your work in the energy sector?
Yeah, it's an interesting question with a very complicated answer that we're still trying to figure out.
Yeah.
So I think to make it short, I looked after mining for quite a long time.
Yeah.
It's a sector where you have to deeply understand the industry and the clients and the commodity cycles, etc. To, as a bank, be able to solve for. And then I headed up the client sector in RMB a bit, but because of my experience in mining, it made sense for me to, take over this oil and gas sector as it started coming. Because they also, it's all about understanding the industry, the DNA of the industry, how it plays out globally and may play out in Namibia. And only then can you, as a stakeholder in the Namibian ecosystem, be a contributor to how this plays out, but also help the entire group of banking group enable the Namibian country and the Namibian ecosystem to play in this space, hopefully, because that's the opportunity.
Absolutely. Maybe for our viewers outside, so RMB, is it a culmination of corporate and business banking and a little bit of private banking as well?
Yeah, so RMB is part of the First Rand group. So it sounds more complicated than it is. First Rand is a combination of FNB Retail, which is a brand that everybody knows, and it's probably the largest brand in the country. Then your FNB Commercial, which looks after the SMEs as well as the commercial sector. And then RMB looks after the corporate sector. So very much the really big multinational companies like your Coca-Colas, your Heineken, and then the companies that are in specific complicated sectors like mining, like oil and gas, like the top end of the logistics side of things, because they need a detailed sector understanding to help bank.
I was just also listening into the panel that you had, and there was a comment that they said capital is shy.
Capital is shy. It's a very good point.
The capital wants to go where it knows that there will be a return.
Correct.
In terms of repayment and so on.
It's a very important point. I mean, you have to understand, as an investor, you're not there for the benefit of the country that you're investing in. That also, and I have to say, the big investors we have are doing a lot of good for Namibia as well. But ultimately, they have been a business with a shareholder. So they want to invest where they can get return on their capital and make a profit. So capital will go where it is treated well and where it is respected and where it is able to be returned and multiplied.
Absolutely. And not only that, the bank or the investors as well, they will obviously be looking at profitable businesses, not just any other business. So that perhaps maybe brings in the question of bridging the skills in terms of the SMEs, entrepreneurs, where we don't have the know-how in terms of the technical aspect of it. But I'm sure as well, maybe you also been dealing with the mining sector. Do you think perhaps maybe part of those skills that we have in the mining sector can be transferred to the oil and gas?
Absolutely. So it's going to be very interesting in the next few months and years what happens to some of the skills that we already have in the country. I'm sure, and it's already happened, that some of the oil and gas companies are poaching some of the mining staff because that skill set is already there. And you'll see a lot of that. But ultimately, the benefit for the country is upskilling at more levels. Not only the skill set, but the ecosystem of mining has many synergies with the oil and gas sector, being logistics, being infrastructure, etc. So I think the opportunity is that, yes, we need to upskill our youth, and they're very active in wanting to take part in this industry, which is great. And the Petro Fund, obviously with different MOUs, does a lot of training. I think us corporates can also engage in training of the youth, in everyone in their capacity. But not only is it about training and upskilling, it's all about if we then have SMEs or people or smaller or bigger companies wanting to play in this space, they're going to need funding. And that's the exercise, and that's my job ultimately, is to find out and really teach our group how this industry operates, so that we can then go and support by funding all layers through, from the retail guys to the expatriates to the SMEs to the commercial guys and to the big corporates to play in this space.
Absolutely. There is also, I just want to pick up on one thing you mentioned that is quite interesting, where you said, correct me if
go for it.
There is no one-size-fits-all kind of a model when it comes to financing. Every business is unique, and therefore you need to sort of try to assess the risk in terms of the business that you have. Maybe for the SMEs and the entrepreneurs out there, what is it that you would have to say to them in terms of that?
So it's a very interesting angle, because it depends on where in the value chain you are with regards to what sort of vanilla standard funding is available. And the F&B retail and commercial space is a big beast of a business, right? Many people, and so you have to have very standard type of products to solve for that business. But we have found that where the industry is no longer just standard, you have, as a bank or as a funder, have to also adjust how your products work, how your solutions work, how your credit works, etc. And it doesn't mean that you can change everything 25 times for every client or every business, but you need to understand how the industry works and how the individuals can fit into the business, and how these new companies that are coming here from all over the world are approaching the industry, so that we can fund the ecosystem as a whole, so the people and the businesses and the SMEs. We've already partnered in the commercial space with companies like Moneda from Nigeria, who are helping put equity into these businesses as well. We're partnering with Harrods. So there's a lot of partnerships starting to happen. Banks can't do this on their own. They have massive amounts of capital available, but it also has to be used responsibly. So I think the whole country is learning. It's still a steep curve to go ahead. And maybe it's a point that people just need to be patient, but walk the journey with the bank as early as they can, so that we can also guide them as to how to do things to be able to get funding.
Absolutely. There's something else that came up in the panel where it was said not necessarily all operators will be borrowing inland, but we have to look at the multiplier effect, the ecosystem. The trickling value chain around oil and gas. Can you maybe just educate our viewers regarding that?
Yeah, look, I mean, these operators have bigger balance sheets than our entire country does. So they're not going to borrow here. First of all, they have a treasury at their head office level that is available with cash, and that's how they compete internally in different companies and in different countries and projects for capital. But also, we, from an availability of funding perspective, are limited to our country rating. And that makes our funding quite expensive at their level. So they can get it cheaper in the States or in Europe or from their own treasuries than they can get it down here. But us funding them is not the game here. Us understanding them and how they pay everyone that they contract, that's the benefit to Namibia. So what I mean by the multiplier effect is, if a Total or a Rhino or a Chevron were to, they will give a contract to 5 or 6 major tier 1 and 2 contractors, international contractors that they work with all over the world. But those guys are going to start using regional and local players. And that's what I mean by the multiplier effect. So every contract they give will be supported by another subcontractor and another subcontractor. And remember, it's not just the technical and engineering side of things. It's the roads and the infrastructure and the warehousing and the storage facilities, and then all of the catering and the people and the training and the marine services and so on. So while one FPSO might only create, and hence one project, 500 or 600 direct jobs of people on the vessel. The multiplier effect of all the industry that has to supply into this ecosystem so that they can operate offshore, that's where the opportunity is for Namibia.
Absolutely. And there's also something that you said, it's also a matter of understanding the industry. Mining has been around for 20, 30 years. Oil and gas is still emerging. We are at the genesis now, exploring, hopefully development by end of the year. 2030 projections are we will be in production. We hope so. And then obviously you have decommissioning. So how crucial is it to understand the industry that we're in?
it's not negotiable.
Yeah.
We have to understand it. First of all, from a risk perspective, you can't fund or support the industry if you don't understand it in great detail. And remember, they are so big and the scale is so massive that this industry isn't going to come and say, oh, dear bank or dear Namibia, how does it work on your side? They will say, this is how we operate, take it or leave it. And you know, while one has to align and make sure that it's a win-win for everyone, they also have extremely high standards. The safety standard is one of the most important in their world. So we as a country, as a bank, as an ecosystem have to adapt to them. But they are happy to help us learn. They are happy to help Namibians learn. Ultimately, it makes a lot of sense for them to hire Namibians over time. Remember, this is not a 5-year game. This is a 25 to 30-year game, maybe even longer. So it will take time for them to help us build our ecosystem, build our transferable skills. And hopefully in 10, 15 years' time, most of these operators and the big contractors are able to say, look, 60 or 50 or 70% of our workforce already is Namibian. And when we leave in 20 or 25 years' time, we have 2 or 3 expats here and the rest is Namibian. But that takes time. The skill set is deep and complicated, and it really will just take time, but then it will be an incredible set of transferable skills that Namibians have.
I'll just digress a little bit. So the local content policy was already approved at cabinet level, I think last year sometime, although it's still contingent on the legal framework that they still have to finalize it. So everyone is hoping for that policy to be finalized eventually. But from a bank's perspective, in terms of legal compliance and regulation, how does the bank align itself, to fit into that national policy?
Yeah, it's a very interesting question, and the local content draft policy is approved. Maggie, our petroleum commissioner, explained yesterday that there is still regional input being sought, as well as some private sector input being sought. They are looking to try and finalize it by the end of the year, at the very latest, maybe earlier than that. Then you have the different policies that have to work. You have the petroleum law as well. So all of these laws, the investment bill, have to be adjusted and amended and updated if you want. Now remember, our petroleum law was created 20 years ago. It's not relevant anymore. It needs to be updated. So there's a lot of work for policymakers and lawmakers to get this right. We have to understand what they look like, because naturally as a Namibian company, we need to comply to these laws, right? And we have a regulator that is looking at how we behave. So it's all about working together with government, together with the ministry and the upstream petroleum unit, to understand the environment that they're creating and then work with them in how to comply to it.
Absolutely. Just to follow up on that, how does RMB support the clients, especially F&B clients and also potentially new clients across the full value chain? That's from exploration to full infrastructure. I think you've touched on it slightly at the beginning, but maybe if you can just demystify that to our viewers. Thank you.
It's not complicated. I mean, remember, funding or banking or support in that space is a basic thing. How to do it is where the complication comes in. So it's for us to learn how does this work and to help every Namibian. So whether it's someone that is, a first-time school leaver and that needs education finance or student loans or home loans if they be able to move more into the city to get certain jobs, all the way through to more complicated personal loans, or solutions to SMEs where we do the partnerships and try and help them get themselves into the spectrum of being able to work here. To the commercial clients, there's asset finance loans, there's normal loans. For this industry, there's now new products or solutions like purchase order finance or contract finance or invoice discounting, just trying to adapt the solutions to the industry. Because we have to mitigate our risk, but we also want to enable the environment. And then naturally, the more complex and large the client gets, the more complex and more structured the funding solutions are, all the way to hundreds of millions of Namibia dollars or even over $1 billion Namibia dollars. So it's really about who's the client and how do we solve for them across the entire First Rand ecosystem.
There's one question about what your advice would be to a potential investor looking to enter into the Namibia energy and resource sector.
So an investor or a Namibian, I think the advice is the same. I would suggest to engage your bank as early as possible, because sometimes people engage the bank literally just before they need the money.
Yeah.
And it will take the bank a long time to understand exactly what they need, where's the contract, what's the deal, what are they trying to do.
Yeah.
And that frustrates people, naturally.
Yes.
Whereas if you start with, this is my idea, let me walk the journey with my bank, even if the funding is years away, to understand how, this is what I need, how do I get there?
Yeah.
So that when the time comes where the opportunity is real and you need the money, 10 to 1, your bank also already understands it and can already structure it as, and then when it's needed, it's there. So it's really about a relationship. A bank, for a normal vanilla project, you can get a loan very easily, very quickly. But for the more complicated stuff in the new industry, I would always say, speak to the bank as long as you can, as early as you can, and partner with them, and then they can help you.
Yeah, that's absolutely true, because I know for the SMEs and the entrepreneurs outside, they actually, as you said, vanilla financing is quite quick.
Yeah.
You have to have your cash flow projections, perhaps maybe 12, 24 months. You need to have some type of an asset that you can give a security and so on and so forth, bank statements. But this is a different ballgame. Yeah, the oil and gas, I don't think you have to give or approach it with the same approach. So I actually agree with you that it's a journey that you need to walk with your bank from the onset, and not just that the last minute rush. It's actually important. But speaking about perhaps maybe interest rates, I know it's difficult because every model is different. Are we looking at less prime or probably?
So remember, the interest rate is always a result of the risk.
Yeah.
So if you de-risk a project either by certain types of collateral or cash security or a contract that can be ring-fenced or an invoice that can be financed, your rate will be better.
Yeah.
So your interest rate will always be a very scientific calculation based on what is the funding rate of banks plus any risk metrics that are added to it. And then that creates an interest rate. So it's it would be amiss for me to provide interest rates, but you can play in the prime space or in the prime plus space if the risk is higher, or in the prime minus space if risk is lower, and also the term of the funding. So it really is, and that's again a reason why you should engage the bank as early as you can, because not only can they then understand your project, but they can say to you, okay, if this is what you're trying to achieve, try and do this, this and this to lower the risk so that your rate is better.
Absolutely.
So there's 20,000 different ways of reducing risk, but it's all about understanding your client and your bank.
Yeah, absolutely. Because I know the banks are having different committees. You have your business banking committee, you have the management all the way to Exco.
Correct.
So that rate needs to be supported all the way through.
Correct.
Hence the reason why it's important to have a relationship with your banker, so that you have a holistic view. Angelique, just what are the main challenges clients are facing this far? And how does RMB help mitigate this risk?
The main challenges in the industry, or to get finance?
To get finance.
So I think the difficulty is that you have an industry where the youth and maybe your SMEs are seeing the opportunity that they can play in this space. They are potentially sitting with a skill set that can get a contract, but they are seen as a startup. And a startup is risky because there's no proof that they can actually do the job. There's no experience that one can look at and say, okay, they've performed the same job 3 or 4 times. And remember, the biggest principle is always that as a bank, you are lending out the guy on the street's money. So if I just give it to someone and say, if you lose it, you lose it, but I can't give it back to you that's invested it, that's not the right thing to do. And that's the regulatory responsibility we have, right? So I think the biggest risk is for them to not understand how to get funding and what the risks are that the bank faces. And again, it comes back to engage as early as you can. The opportunity set is really big. And it's also for the banks to learn how to deal with this new opportunity set. We're doing a lot of work to do so, and very expensive and a long training to get it right. But it's not gonna be immediately sorted. It will take time.
It's not a quick fix.
It's not a quick fix. It will take time, and you still have to do the right thing for the country and the regulator, right? But you can adjust how you approach it, also by understanding things better.
Absolutely.
So I think the challenges are out there, how to take part, how to educate yourself, how to get the right skills, how to get the right contracts. But when that happens, and remember, we are also trying to play an industry connector role by understanding the operators and the contractors and maybe helping SMEs educate themselves. And by partnering with the Petro Fund for that kind of education, for example. So it's all about becoming a stakeholder rather than just a bank, partner to the industry rather than just a bank.
I was personally checking out the Petro Fund site. They actually have good scholarships that they're giving there.
Great scholarships.
So for the youth and the interested, passionate people out there, I think there's a window opening in October for applications.
Absolutely.
The first intake is around January. Just to wrap it up, Angelique, future outlook. What excites you most about the future of Namibia energy and resource sector?
You know, this sector, and I'm very lucky, but I'm also exhausted, is everything is happening in this space. So the mining space looks great, and that's where the resources comes in. We are looking at massive uranium opportunities now that the uranium price has recovered. We're looking at one new gold mine being built. Others maybe have potential. Copper has a whole new life. Diamonds are in a bit of trouble, but you know, that's the beauty of Namibia. We have lots of different commodities, so we can ride the waves. So in the mining space, things look really exciting. In the energy space, things look extremely exciting. We've always been a main energy importer. Now we are building renewable capabilities all over the place. We're also looking at hydrogen, which is another source of energy, potentially, even if at the moment it's more green industrialization than actually creating energy. It's creating energy for projects, not for the country. Not yet. It's a bit of a journey. We're looking at potentially gas if the Kudu gas project comes online, and we're looking at potentially oil. So the opportunity set is huge in all of these areas, and they all link into one another. So I'm excited. Naturally, the biggest multiplier would be the oil and gas industry. I hope we as a country, as a government, and as a private sector, as a partner, can get this right to attract this investment, because I think the multiplier effect will simply be huge. But in it, the opportunity for mining and logistics and resources and everything that plays into the space is huge. So I think if we play our cards right as Namibia, we've got a great future here.
Well, there you have it, Angelique. I wish I could have you for longer, but I need to let you go. Thank you for sharing your insights, your experiences, and it's been very, very enlightening to hear your perspectives on the Namibia energy outlook. So to our listeners, stay tuned for more expert content, and for now, stay tuned and stay empowered. Thank you very much.